Good morning. That's always awkward when nobody talks to me.
Good morning.
I'll take the jumbled Ken Liberty any day over silence. Thank you, Ken. Kelly, how are you?
I'm doing fantastic, Brad. How are you?
I am good. It's March.
I'm gonna tell you what. I know we're gonna hit on this, but I'm still on that family reunion high, and not just because it was fun and connecting. I feel like I got some real tools I can implement and already started working towards. So I'm still on that high.
Let's go. Well, it's my birthday month, so it's a good month. All right, let's jump in. All right. So, Fulton County, 549 active status changes. We're back on up on an upswing. Had a big early February, and then we kind of dipped down, and then we're kind of climbing back up on the active status changes. 146 went under contract last 7 days. I expanded this to 10 because I love to see this incline. So that's what a spring market looks like. And that's the highest 7 day total we've had year to date of properties going under contract. So that makes me happy. There's 42 coming soon, 269 pending, and 215 closed out at the end of the month. Now, I always make the disclaimer, real estate agents don't always close out their closings that happen Fridays. So this is probably an even higher number than what this is. But if you look back, end of January, the end of the month closings were 187. We're at 215. So certainly an increase. I feel optimistic that the year is here. Let's jump down. DeKalb County, we've got 297 active status changes, 88 went under contract. So DeKalb's not the exact same story. So, like, there were a couple weeks they put 95 under contract, and then they had 88 2 weeks ago, and then 88 again here. So, super good, stable numbers, but it looks a little different. Like, it looks like they came out the gates running in DeKalb County, and they're still running, right? 23 coming soon, 158. So that outside of January 12th, 158, 181 2 weeks ago in the pending category. There certainly were a lot that closed out. And then 116 closings at the end of the month. So looking back, there were 101 and 149 at the end of January, and then 116 this week. Cobb County, 298 active active status changes, which is strong. 97 went under contract. So they had a week in the beginning of January at 105. So this is the second strongest week in year to date in Cobb County. 36 pending and 185 pending with 142 closings at the end of the month. With you look back at end of January, early February, 122, 133, coming in at 142. Feels like the year is here. What do you think, Kelly?
I can tell you just by my phone calls this weekend, the year is here. We have always our really top producing agents putting stuff on our contract, but I'm loving all the agents that are on the newer end that called me this weekend. So I'm in agreement with you. It's the stats are showing it, and my own personal experiences are showing it. And I think there's a multitude of great reasons that spring is in full swing.
Yeah, I just want to remind everybody before we move past stats, we track all these counties. Now, I don't go over them every single week. We hit the three big counties, but whether you're in Bartow or Gordon or Floyd, or you're doing a deal in Paulding County or Cherokee County, we have all these stats. So you can come in here and look and just look at that specific county stats if you're doing transactions in those areas. All right. Atlanta Business Chronicle put out this article. Luxury housing surges as general market declines. So here's what they're saying. Homeowners are in a financially comfortable position. That was the assessment of chief economists last week. In different parts of the country, had different experiences, but the luxury housing market shows strong momentum for 2026. What do you feel about there in the luxury space, Kelly?
We definitely see things going under contract. I haven't quite seen quite the same appreciation level, but I feel like this is the people that have the opportunity to move because they've likely made so much money in real estate over the past, could be decade plus, that if it's the right time in their life to be moving, they can make this decision and do it. The
Yeah.
affordability factor is not so much for them. I could see that definitely surging. Surge is a strong word, but I would say it's moving.
Yeah. You know what I'm experiencing is, or I should say, the market is experiencing is really four different segments. There's
Hmm.
the single family market, but there's also the single family median home price market and a luxury single family market. And those experiences are a little bit different, right? Like they trend the same
Right.
way, but luxury is probably outperforming single family median home price market right now. And then you also have a condo attached market inside the city limits that is having a very different experience than the single family market. And whether you're doing business uh, in one of those segments of the market, um, a lot of times we talk in generalities in terms of what the market's doing, but they are different experiences. And I think luxury is certainly one of those experiences that's actually on an upward trend, a little bit different than the single family market, for sure. The single family median price market.
Correct. I would agree with that statement.
All right, let's jump in because we got a lot to cover here. So I'm excited. This is the first time I've shown the mortgage rates with a five on it. And this was the close of business Friday at 4 p.m. So I made a comment weeks ago that mortgage rates were going to be stubborn. They're going to fight to get to 6%. And we certainly have a moment in time here where people probably got below a six. And that's really exciting. And we had some international conflict happen over the weekend. And what will this do to the real estate market is to be determined. But I think there's some talking points that are worthy of notating. So, what will this war with Iran do to mortgage rates? Will it make them higher, lower? Historically, um, people are pondering with the weekend attack on Iran. People are pondering what the outcome will be Monday morning. Uh, Part of this is, I believe, that traders don't fear a wider escalation in the Middle East, meaning they think it's probably a short term solution, but we won't know until we see what the Wall Street does today, right? However,
And
traditionally, when you have a military conflict, specifically in the Middle East, people would expect money to flow into the US dollar and the US bond market as a safe haven, and oil prices would rise. That formula actually would bring mortgage rates down. We don't anticipate people to move money into the US dollar or the US bond market right away. And I think what he's talking about in here is we're kind of breaking with historic trends or traditionally how money moves after the market. My wild suspicion is mortgage rates are going to probably go up to six and a quarter in the short term. And I think The bigger conversation here is not specifically what's going to happen to the mortgage rate, but what is consumer confidence going to be in the next couple weeks around buying real estate, knowing if you're like me, I've probably watched a lot of negative news or read a lot of negative news over the last 24 to 48 hours. And does it affect my mindset? I think I'd be lying if I didn't say it did a little bit. And I think some people are more affected by it. But I also
Mhm.
know if it does affect consumer confidence, that also translates to opportunity for some, meaning showings could go down. I don't think they will, but maybe it's opportunity. What do you think?
So I definitely agree that it's a little too soon to tell for any kind of long term, and it would always be how long does this, in a sense, we'll call it a war, I guess, last? If it's days, weeks, months, 2 years, two different scenarios. I did have all the news on as well this morning. Obviously, Dow's down and some things just because it's unstable, it's unpredictable. But that doesn't mean that's a long-term thing. That's just a instant Monday morning reaction to a weekend, obviously very important event. And I personally think if interest rates fluctuate a little bit by quarter, it doesn't obviously every buyer wants the lowest interest rate, but it doesn't prevent someone who is already planning on buying to buy. And those people had already been thinking about it likely before this past weekend. And regarding, they said oil prices, we've actually become, even as a, not just a country, but a world, less dependent upon Middle Eastern oil. There's more places around the world that has it. So that effect on our economy is not going to be as much, given the location of the war. So that shouldn't affect, the energy prices shouldn't affect other businesses. And regarding where things are going, I think our job is just to, there's people who had well before this scenario had already made up their mind to go buy or sell. And for us just to be that steady hand in that process. And, regarding rates, even if it goes to 6.25, we were just there like 2 weeks ago, 3 weeks ago. It wasn't like such a far distant memory to
No.
go to talk about a 6.25 interest rate. I don't see it skyrocketing high. Um,
Uh,
you know,
yep. Rick, what's your perspective?
It comes down to duration and tangible impact. The question is, are we really impacted or is it a media narrative for now? And what is the real ripple effect on whether it's oil or any other international, I guess, asset that we import? What's the effect on pricing? And again, it all boils down, like you said at the onset, to consumer confidence. And again, the question is duration. If we're in and out of this, there's going to be some short-term volatility. If it languishes or goes on, it could have a different ripple effect.
For sure, for sure.
But nobody has a crystal ball or knows. But
we
from
don't.
afar, it feels like more media narrative relative to the economy than reality based. In 3 days, did things really change economically?
And Rick, I 100% agree to, because I think those who wanted to buy a house this year made up their mind like months ago, or sell a house. And that's where, as professionals, we keep continuing to talk to those folks. Like to Brett's point, there's going to be people because they have a personal connection to the region, to, maybe those in the military, they're going to have a different impact than others. Um,
Yeah,
but
for
people have already
sure.
made up their mind. They've already made up their mind this year if they're going to buy or sell. Most people have, whether they've called you or not as a real estate professional. That's the people we got to go find.
Yeah. Is it a wait and see event or is it we're confident it's going to be a blip on the screen? That's the consumer question.
Yep. Anyway, I think Wall Street will tell us a lot today. So you probably at the end of I think what Wall Street closes at what, 4
Or,
o'clock?
yeah,
4. So about 4 o'clock today, we're gonna know how the market's gonna
it'll be a down day. It was
it'll
this
be
morning, I'm
down. It'll be
assuming.
down, I
Yeah.
think.
It's just how many
Um,
days is it down?
yeah, so we'll just watch the market, but I don't see this drastically affecting the real estate market at the moment. I think it'll affect mortgage rates, but I don't see it drastically affecting home sales
Agree.
or listings or anything along those lines. But we'll keep our finger on the pulse, right?
Correct.
All right, moving on. So Gary Keller put out an op-ed that I think is really powerful. So he talked about how broad listing exposure still matters in real estate. Keller says sellers should choose, but broker pitches should not replace clear pros and cons about exposure and price discovery. So he breaks this down into a conversation around how we represent sellers. So there is a big conversation in the marketplace around private listings or coming soons or off market listings. And what he's talking about is not that there's not scenarios where that could make sense to a seller. What he's talking about is really around disclosure. And if you were to uh, advise a seller to do coming soon or advise a seller to do a private listing or something along those lines, there's potential harm that could happen to a seller if you don't disclose properly. It could land back in your lap in the sense of if a property gets marketed pre-MLS outside of certain guidelines, there's portals that won't put that listing on those portals. And in order to drive the highest net value to a seller, it's still believed that the exposure matters, meaning exposing that listing to as many people as possible. The data proves that you will get the highest price on that listing. So if you were to take a path of off market or coming soon or something along those lines, and it eliminates the opportunity for maximum exposure long term, potentially that could damage a seller. So what Gary Keller's talking about here is not one's right or one's wrong. It's more about being educated and disclosing to a seller the pros and cons and letting the seller choose appropriately. And our industry is very fuzzy around this right now, meaning we're not disclosing to the sellers. And this coming soon or private listing or off market or whatever you're positioning to a seller is being pitched more as a sales approach or a marketing approach, not a choice with pros and cons on both sides of the equation. Does that make sense? So I think disclosure is going to be coming high at our industry this year. And what does that mean? He's saying, let's be clear, sellers should have the right to choose how their home is marketed, but also disclosed around the options and the pros and cons of it, right? And I think it's really important because disclosure has always driven our industry, from sellers' disclosures to commission disclosures coming out of the NAR lawsuit. And with the lack of disclosure, we find ourselves as an industry in a class action lawsuit defense position. And I just see the future changing in a sense around disclosure, because I think that the rhetoric in the marketplace is confusing to the consumer at the moment. And Rick, I will certainly want your perspective, Kelly. I mean, I don't think agents are disclosing this scenario correctly to the consumer, and I don't know. What do you think?
Ultimately, the consumer rules, and they need to be given clear understanding of availability and options. And then I think the most important part of this, it needs to be in writing or some documented way that you covered all aspects of their choice as consumers. I think when we fall into trouble is when we make assumptions or their perception is that we push them in a certain direction and that they ultimately didn't have a real choice, which is the Setzler lawsuit. I mean, is a perfect example of that, where we were disclosing perfectly, but our industry is going to also have an effect on general population move. And the fact that there was a class action suit that was won when honestly, I feel like we did a good job of disclosure. So humble opinion, Compass is treading on thin ice in terms of antitrust and monopolizing, a private listing network for personal gain. And at the end of the day, we all need to protect ourselves with as much forthright written disclosure as possible, that they were fully informed in terms of our clients.
Yep.
I think, and I'll say to this too, first of all, it makes me so proud to be in a company like Gary Keller is saying about we are about disclosure, because I have heard it, the sales pitch that Compass in this case uses, which is like, we're going to test your price. Well, let's be honest about that. If you're only exposing it to say 100 people or 200 people or a smaller pool number, is that really testing my price? Because I got to expose it to the general public or the even the greater MLS, which is, what do we have, like 40,000 agents in the MLS or 30 something? And that is a different statistic. And so how are you telling me you're testing my price? That doesn't even make sense mathematically. So it's a sales pitch. And at the same time, I also worry about fair housing, where if you limit who gets to have access, and I agree, sellers have the right to choose how they want to. They can go for sale by owner if they wanted to, in a sense. But it's a very slippery slope when it comes to limiting exposure or broad exposure. And it just really, going back to the point of disclosing, I've seen the material. It's a sales pitch, and I love that we're, as a company, all about disclosing and accurately disclosing. And you're right. There's somebody out there that's going to try to catch somebody who's not disclosing properly and could probably take it into another national lawsuit. So it'll be interesting to see where things are going to go with this.
Yep.
You're making
So
a
this next
very
article, go ahead.
Go ahead, Rick.
Well, he's frozen with a funny look on his face. All right, I'm going to keep going. So this next article, the rocket deal, Compass strikes at organized real estate. It really seems like war. If I was a large MLS, I would be having war room discussions about what our model is going forward in a worst case scenario. So there's certainly pushing on the status quo. And he's doubling down on this conversation around private exclusives, which lends back to the previous conversation. But I think what everybody needs to be aware of is this could change how residential real estate is done in the future. Not from a fear perspective, but it could be a negative in a sense of how real estate is done, because he's taking on Zillow, he's taking on CoStar, he's taking on a lot of things, and it might be disruptive, and might be disruptive in a bad way. Anyway, I just put it up here because it's certainly a hot topic out there in the industry right now. This next article, I think is fascinating. So it says, attention listing agents, buyer beware won't prevent a lawsuit. So unlike car salesmen or furniture retailers, agents operate under a license issued by the state. That license comes with fiduciary duties. And here's the commentary. It says, there's a dangerous myth circulating among some real estate professionals, and it's time we address it head on. The myth is the belief that the phrase buyer beware, or the practice of selling a property strictly as is, somehow shields agents from liability. And this goes back to disclosure, right? Like, you can't just say, oh, it's as is, and eliminate any liability that you might have known something or you didn't disclose, or buyer beware, because we have some layer of licensing that causes us to have a higher standard than what a used car salesperson might have, saying, "Oh, you're buying this as is," right? So buyer beware or as is doesn't apply to you. And unlike a car salesman or furniture retailer, you don't just facilitate a transaction. You operate under a license issued by the state. This license comes with fiduciary duties, higher expectations, and ongoing accountability through continuing education, blah, 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 blah. I just think it's interesting because we are held to a higher standard as a licensed professional than this whole as is buyer beware mentality. Kelly, what you say?
Yeah, and I agree. We should be held to a higher standard. So, hopefully, everyone's actually read the buyer brokerage engagement and the seller broker engagement, because technically, Georgia, we're not fiduciary, but we act as a fiduciary. We don't have the legal definition of fiduciary. We're not that, but we act in a fiduciary manner. And yet, if you read our broker engagement, it says in there, buyer or seller, that if there is anything that I'm not supposed to disclose that you don't want me to, say like somebody's going through a divorce or whatever, I don't just need to disclose my client's personal situation. Yet, it says in our agreements that, but if there's something that I am to disclose, I am to disclose it. So if I had an inspection report and saw that there was mold, someone asked me, I am to disclose it or have my client disclose it. So that's actually kind of written in our agreement at our broker engagements. The other thing is we have latent defects. Even if you have knowledge of something, you are to disclose any kind of latent defect. And so that being said, I can see how it is a buyer beware state in a sense that the burden is on the buyer to go out and perform all the inspections. And I love how this article actually bullet points what to do. But if you have knowledge of it, whether you're the seller, whether you're the agent, you do have the fiduciary responsibility to disclose. And so let's just prevent lawsuits and just do the right thing and share what we need to share. So.
All right. So real quick, I want to hit one thing that came out of Family Reunion real quick. So you're aware on the real estate stats, we have Florida, Georgia, Texas, but there's a national tab. When you click the national tab, we keep the vision speed slides updated here. So you just click this slide and then you can start scrolling. And I wanted to hit one thing real quick. So home sales. So 2025 finished at like 4.1, which we've had 3 years now at that lower number. And the contrast would be in 2021, we sold 6.1 million homes, right? So that seems like a drastic dip in transactions on a national front. However, if you jump over to a few slides forward, look at total market volume. So in 2025, we had the third highest total transaction volume in history. So while the units are down, the volume is not as down. So there's this crazy conversation around sales price. So obviously prices appreciate over time. And let's say in 2021, I sold 2 houses a month for 24 units and I sold $5 million. I might have sold 20 houses in 2025, but actually sold $6 million in volume. So while my units are what we typically focus on from a business scaling perspective, total volume matters because that's what we're paid off of. So I don't think the story is as drastic as what the unit number shares, but it's certainly the volume's down 0.6 trillion, right? Like, I mean, it's down from what the peak was, but at the same time, we had the third highest total volume we've ever had in history of real estate transacting. So it lends itself to this conversation around, does sales price matter? 100% sales price matters. And as a real estate professional, there is strategy around raising your average sales price. And certainly circle prospecting in higher price points, doing open houses in higher price points, networking with higher median sales price individuals can be a strategy to overcome any downturn in the market. And, I don't know, this hit me differently this year, Kelly, when he showed this chart, because I think I've been under the assumption we're just in a down market, but this tells a very different story.
Yeah, it definitely says that if you've been putting in the activities and you're making your sales, that you can still have a decent income even with a fewer transaction. And certainly those who had longevity in the business can probably have that a higher price point. I love what you're saying, go after price point. At the same time, I'm always still going to be that girl that says, count the number of transactions, because it's that phrase that I think it says like you could be losing so slowly that you think you're winning. Meaning, if your number of transactions keep going down and down and down and down, even though you have a nice price, you think you're winning because you got a nice paycheck, but you could eventually have someone else take too much market share and you go out of business in a handful of years if you don't put in the activities. Yet, I feel I'm encouraged that people can at least make money in a market where it's fewer transactions. And because prices are nice.
There you go. Well, there's your update, guys. I didn't see anything in the chat we didn't address here. So, or not just low end price point, Keith. Yep. Investors, target investors, and understand investment numbers. There you go. Well, happy Monday, guys. Hopefully there's better national news by next week. But watch the market this week. I do expect it to be a little disrupted in interest rates, but nothing crazy. And we'll see where we land a week from today.
Awesome.
Have a
You
good
have a great
one.
day.
Bye.